Good morning, trading family. Dollar at November highs, but my calendar says we're in June. Somebody's lying to us, and I intend to find out which one. Wildcard in the building, TB's in the chair. Let's dig into this tape.
TB here. Quick reminder, nothing we say is financial advice. We're two guys with screens, opinions, and positions that go red just like everyone else's. Do your own research before putting money anywhere.
The tape is ugly this morning. S&P futures down another 0.5%. Nasdaq futures getting smoked again. Dollar index at levels we haven't seen since November. That's the anchor weighing on everything. Oil below $76 a barrel for the first time since before the Iran war kicked off. And here's the frame that matters. We've got Qs back-to-back 3% drops. You don't see that often.
You really don't. The only comparable setups were the SVB crisis in March 23 and the rate hike cycle in 22. This isn't a normal dip. The velocity of the selling tells you institutions are repositioning, not just taking profits.
That's exactly it. Bloomberg ran the same artificial intelligence bubble headline 2 days in a row now. When the narrative locks in like that, it feeds itself. But here's what makes this different. Bria had one of its worst days ever yesterday. Morgan Stanley specifically flagged it. And then Samsung drops a $50 billion buyback announcement, one of the biggest in history, and it barely moved the tape.
$50 billion of buying power, and it couldn't stop the bleeding. That's the tell. When that kind of firepower can't reverse a sell-off, you're not dealing with event-driven selling. You're dealing with structural repositioning. Funds are rotating out of tech exposure, and they don't care what price they get.
MLIV put out a piece this morning that absolutely nailed the psychology. Volatility is now a feature, not a bug. Retail is treating this like a casino that's rigged in their favor. And Mark from MLIV said something that stuck with me. This isn't the bubble popping yet. It's the volatile end stage. He compared it to 1999 and the 2008 GFC. Said it lasts about 6 months. And we started this phase in May.
So we're maybe 2 months into a 6-month volatility regime. That means we've got 4 more months of these kinds of swings if he's right. Adjust your position sizing accordingly.
Every single person staring at the tape right now is asking the same question. Is tonight the night that decides direction? Because Micron reports after the close, and the whole semi-complex is holding its breath. TB has been tracking the memory cycle since the Hynix HBM4 reallocation story broke 2 weeks ago. Brother, take us through it.
Micron tonight is the fulcrum for the entire semi-trade. Here's the raw setup. The estimate is $20.81 EPS. The stock was at $1,089 at yesterday's close, and it got ripped down to $1,062 in the pre-market. That's down 12% from its recent high. Korea contagion hit memory stocks specifically. My wave trader Algo picked up 18 shares yesterday at $1,053. One sentence on that, then we'll talk fundamentals. We'll see by 4 p.m. whether that was timing or whether I'm about to eat a stop. Here's what matters for the memory thesis. Apple just absorbed a storage cost shock that's flowing directly into Micron's revenue line. Mobile storage prices are up almost 4 times in a single cycle. That's not normal cyclical movement. That's a structural supply crunch. Samsung and SK Hynix reallocated HBM4 capacity away from commodity DRAM to chase the artificial intelligence margins. That left the broader market undersupplied. Micron is the direct beneficiary because they held DRAM capacity while competitors shifted. So the 2081 number is achievable if they maintain margins through June. The real question is guidance. Memory cycles are feast or famine. When demand softens, pricing collapses faster than any other semi-vertical. If Micron guides down even modestly, the memory trade gets destroyed and Qs test $700 this week. But here's the other side. If they guide north of $22, the entire semi-sell-off gets bid back up tomorrow, and we're talking about an $1,100 stock by Friday. I'm not making a prediction. I'm saying the asymmetric move is to the upside if they deliver, because the market has already priced 12% of downside into the stock. That's baked in. The beat is what nobody's positioned for.
That's the cleanest trade setup I've heard all week. The market's already priced a miss. The gap is open. If Micron hits the number and guides right, that gap fills in minutes. My paper account is sitting at $1,050 entry, $1,020 stop, $1,120 target. I entered this trade specifically because of that Apple memory cost quote. Tim Cook supposedly called it a 100-year flood. When the CEO of the world's biggest memory buyer says that, you pay attention. But here's where it gets tricky. The macro crosscurrents are fighting each other. Dollar just surged to November highs on Fed rate hike bets. Citadel Securities came out and said second round effects are going to force a September hike. That's not some random analyst opinion. That's Citadel, one of the biggest market makers on the planet, telling you how they're positioning. And at the exact same time, oil dropped below $76 a barrel. First time since the day before the Iran war started. The war premium is collapsing. We've got Iran sanctions waivers, a 60-day pause in hostilities, and the Senate voted 50-48 on a war powers resolution directing the president to remove forces. 4 Republicans crossed the aisle. Cassidy, Collins, Paul, Murkowski. That's not symbolic. That's real legislative pressure pushing toward peace. So you've got a dollar that says rate hikes are coming and oil that says disinflation is coming. These two trades cannot both be right forever. PCE on Friday is the tiebreaker. TB, you've been tracking the dollar move closer than I have. How much of this is genuine rate repricing versus safe haven flows from the Iran deal volatility?
It's overwhelmingly rate repricing. Gold is down 1.1% this morning. If this dollar move was safe haven flight, gold would be ripping toward 4,200. Instead, it's getting crushed the same way tech is getting crushed. That tells you the dollar bid is about the Fed repricing, not about people hiding from geopolitical risk. The peace deal is actually deflationary. Lower oil means lower shipping costs, lower input costs for manufacturers, lower defense spending commitments. That should argue against a hike. But Citadel's point is that the second round effects from tariffs and wage growth are sticky regardless of what oil does. They're saying the core inflation problem hasn't gone away. The headline just got temporarily cheaper. Here's the key number to watch Friday. Core PCE is expected at 3.3% year over year. If it prints above 3.5, the dollar rips further, Q's goes below 700, and Micron's guidance tonight won't matter because macro overrides everything. If it prints 3.1 or lower, the entire sell-off gets faded into the weekend and we get a massive relief rally. Anything between 3.2 and 3.4 is noise that leaves us exactly where we are right now, waiting for the next catalyst.
That's the cleanest framework I've heard. Gold down 1.1% proves your point. Rate repricing dollar means gold gets smoked alongside tech. Safe haven dollar would have gold at 4,200. It's not there. So, PCE. Friday is the only number that matters this week. Micron tonight is the appetizer. Friday is the main course. Now let me hit something nobody's talking about enough. While everybody's staring at Q's bleeding and waiting for Micron, there's a whole separate unwind happening in the defense sector that tells you exactly where capital is rotating. Germany just scrapped 6 F-126 frigates, their biggest warship commission since World War II, and they're buying smaller boats instead. Rheinmetall dropped 13% on that news. That's a single stock, but it's a symptom. The Senate voted 50-48 on that Iran war powers resolution. 4 Republicans crossed over. That's legislative pressure building behind the peace deal. Defense stocks have been the safe haven for 2 years. War in Ukraine, war in Iran, military budgets exploding everywhere. That trade is unwinding right now, and nobody's talking about it because the Q sell-off is all anyone can see.
And that money has to go somewhere. It doesn't just vanish. Look at the sector board. Utilities up 0.74% this week. Financials up 0.6%. Industrials only down 0.3. Meanwhile, communication services down 4.39%, consumer discretionary down 4.06%, tech down 3.96%. The rotation is real and it's flowing into defensives and value.
Exactly. The rotation is happening underneath the noise. And here's the twist that nobody's looking at. While defense gets shredded and semis bleed out, Big Pharma is circling distressed gene therapy platforms. Sangamo Therapeutics filed for bankruptcy yesterday. Eli Lilly and Astellas are both kicking the tires on the assets. That's the kind of M&A signal that tells you smart money is buying distressed quality while the crowd panics into cash. It's not a trade you act on today, but it's the kind of thing you file away and watch for follow-through. Capital is moving. You just have to know where to look.
That Sangamo situation is worth flagging. When you see Big Pharma buying bankrupt biotech platforms while everyone else is staring at a tech sell-off, that's a leading indicator for where institutional money thinks value is building. Keep it on the radar.
All right, let's transition to the calendar. Tonight is Micron, but there are other notable earnings this week. Dry, SNX, MKC, BB, WW all report Thursday, so we'll say that plainly and move on. But Friday is absolutely packed with data that matters.
Friday, June 26th is the decider. Core PCE month over month expected at 0.3%, prior was 0.2. Core PCE year-over-year expected at 3.3%. Headline PCE prices expected at 4.40%, same as prior. Durable goods orders expected down 4.7% month-over-month. That's a massive swing from the prior reading above 8%. Third estimate of GDP expected at 1.6%. GDP price index expected at 3.5%. Then Saturday, we get Michigan sentiment with the headline at 48.9 and one-year inflation expectations at 4.6%.
And Monday, we get Japan. Large-scale retail sales. Prior was 2%. But honestly, nobody's going to be trading off that Monday print. Friday is the whole game. Soft PCE means dollar gives back and tech gets a relief rally. Hot PCE means dollar rips further and Q's tests 700. We've got the sector board confirming risk-off rotation. We've got international markets adding to the pressure. Let's hit those quickly.
Asia overnight was a mixed bag. Nikkei down 0.8%. Hang Seng up 0.3%. Shanghai Composite down 1.26%, which adds to the broader emerging market softness. But KOSP, I bounced 3.26% after that historic sell-off. Europe is cautious. DAX down 0.75%. FTSE 100 flat, Euro Stoxx 50 down 0.13%. On the currency side, the dollar index is up 0.18%. USD, JPY up 0.12%. The yen carry trade unwind risk is still simmering. Bank of Japan core CPI was released today. Prior was 2.8%. The market is watching for further yen strength implications. If the yen keeps strengthening, that carry trade unwind accelerates and it hits risk assets globally.
The carry trade is the thing that keeps me up at night. When Japanese rates rise and the yen strengthens, all that cheap leverage that's been fueling the tech trade starts unwinding. We saw the preview of that with the Korea sell-off. That wasn't just a Korea story. That was a carry trade story. Now let's go deep on the portfolio. Hot news. The memory cycle and Micron is make or break. We touched it earlier, but let's tell the whole story.
The memory cycle thesis starts with Apple. Mobile storage prices are up almost 4 times in a single cycle. That's a structural supply crunch. When the biggest buyer of memory chips on the planet sees that, you listen. What's driving it is a structural supply shift. Samsung and SK Hynix both reallocated HBM4 production capacity away from commodity DRAM to chase the higher margins in artificial intelligence chips. That left a supply hole in the broader DRAM market. Micron didn't make that same shift. They maintained commodity DRAM capacity, which means they're now the primary beneficiary of the supply crunch. The bull case is straightforward. Micron hits the $20.81 estimate and guides above 22. The 12% pre-market drop was overdone. The stock rips back to 1100 by Friday. The whole semi-complex gets bid up. Q's relief rally. The VIX rate of change on my wave trader algo is sitting at 2.7. which is well below the 4.0 threshold that,